Welcome to TP Talks, PwC's Global Transfer Pricing podcast series. This episode is part of a special series of episodes on tax analytics solutions for our clients. Today, we will be discussing digital labor and process automation. My name is Ben Brewer, and joining me today are Michelle Lee, a tax reporting and strategy partner and PwC's digital labor leader, Mike Engel, PwC's intelligent process automation leader, and Andrew Wang, a managing director in PwC's end-to-end transfer pricing practice, leading the transfer pricing engine services. Mike, can you define digital labor for our listeners and explain why this is an important area for our clients?
Ben, thanks for that question. It's a really good place to start because, first off, when you think about digital labor, the definition has really become quite fuzzy, and it's changing based on what everybody's reading in the news in terms of artificial intelligence and blockchain and all of these other technologies and how do they apply. So first, we really do have to start with kind of a definition of what it is and what it isn't. And from our perspective, what digital labor is about is mimicking what people do in terms of their interaction with underlying systems. So taking a software technology overlay that really just does exactly what people do, and we're just trying to fill the gaps between all of those other technologies, like their enterprise, their ERP systems, their data and analytics, their third-party tools, and all that sort of thing. But if we start there as a base, it really helps us to kind of ground ourselves in what digital labor is. So when you think about the other technologies that we like to throw around, like artificial intelligence and all of those sorts of things, these are layers on top of base RPA. So what we're trying to do, basic RPA, is all of those sorts of things that are non-value added for human beings, particularly for the tax professionals. They spend an inordinate amount of time on things like getting data from a number of different systems, validating it, maybe creating reports and all of those sorts of things. And we can take that activity and basically compress it by using these digital laborers. So these other technologies that we're describing allow us to start to add judgment and some sort of inference perhaps to what the person may do in their daily job. But these are emerging technologies, and so I think for now, particularly where it applies to tax, we should be focusing on those basic blocking and tackling kind of activities that we can do with RPA.
Yeah, that's interesting. So, Michelle, from a tax standpoint, what are some common tasks and processes that digital labor can be applied to?
Thanks, Ben. We get this question, I think, almost on a daily basis. So as Mike just referred to, I think there's a number of different areas where there could be this blocking and tackling. So in the broadest sense, I think we could look across both the indirect and the direct tax area. So I know we're going to go a little bit deeper, but I think the most common areas come up in the indirect because the criteria that I'll kind of specify here is that we're looking for repetitive tasks or activities within a process that requires some level of rules-based task, as well as the frequency and the repetition of these activities. So kind of by default, I think most companies are looking at areas like the sales and use or VAT as a starting point. But when we look to the income tax area, one of the things that we identify is really asking a different question first and foremost, which is if you had all the time and resources, where can you apply this type of digital labor? So, for example, while you may be doing some type of a calculation once a year, because that's kind of what's required, if you had more resources and the time by using digital labor, would you be able to access that information, run that calculation more frequently, maybe quarterly or even on a monthly basis? So the typical areas that we come across in the income tax could be in the intercompany reconciliation, so which leads into more transfer pricing, et cetera. But just sort of that blocking and tackling, as Mike said, and other things such as fixed assets, again, where it requires pulling large volumes of data and doing mapping or some of the calculations. So that's where, from an income tax area, that we see some opportunities. But going back to what I said, really understanding some of those criteria and applying them in the tax area, I think is key. The last thing I'll say here is that, just because something could be automated, we would recommend not to just automate it, but really focus on how to lean out that process first and eliminate any steps, and also really thinking whether it is RPA or some other type of solution that could be a better alternative rather than applying RPA.
Oh, thank you. And then, Andrew, further to what Michelle just mentioned, what are some specific areas or specific tasks in indirect tax or transfer pricing where companies should evaluate implementing digital labor and process automation?
Thanks, Ben. As Michelle mentioned, some of the criteria that apply for digital labor to make sense are kind of volumes of data, frequency, and specific or straightforward rules to apply or program into digital labor. And indirect taxes such as VAT and sales of use make perfect sense. VAT, you have to indicate, is it the sales of goods or services. You need to have the jurisdiction identified from the seller to the buyer, and you have to process many intercompany transactions and summarize into the buckets and apply the appropriate VAT rates and the refunds. So those are very rules driven, and the fact that it's something you have to do for many countries, especially in the EU area, and doing every month is a kind of ripe target for digital labor. Similarly with the sales and use tax, classifying whether it's intercompany sales or the purchases for use tax perspective. And obviously, many multinationals do, business in all 50 states, taking a transaction, identifying the appropriate jurisdiction, and all those kind of matrices of a tax treatment that can be programmed to logic. I think it's another kind of easy area where digital labor has been ahead of the curve in applying it to a tax function.
And Andrew, specifically to transfer pricing, are there some areas where companies can benefit using these tools as well?
Absolutely. I mean, because of my responsibility, we're definitely looking into leveraging digital labor in the transfer pricing in a company area. I mean, a couple of examples I could share is, one that Michelle mentioned, just managing the reconciliation of intercompany transactions, whether if there's accounts payable and accounts receivable on two, the related parties to relate the subsidiaries have been booked correctly into the right accounts, right cost centers. A multinational can easily have millions of transactions valued, billions of dollars in each month, each quarter, and kind of going through that manually to reconcile and settle intercompany transactions has been very time-consuming. And I think with the judicious use of digital labor, that time spent on reconciling intercompany transactions can be shortened dramatically. And, similar to that, there are certainly, intercompany or transfer pricing calculations that tax departments end up doing a lot. And another area in transfer pricing is, some of the calculations that the tax department have to do as a part of their tax reporting and transfer pricing compliance, such as management service allocation. So this is a case where, the headquarters or regional headquarters provide certain services to the subsidiaries, but that cost needs to be charged out to make sure that the costs and benefits are aligned. And right now, having to calculate these cost allocations manually in Excel for larger multinationals can be very time-consuming. But based on rules being set up, what cost centers to pick up to be allocated and how the allocation driver should be calculated based on, revenue, headcount, all those are fairly straightforward rules that we think can benefit from digital labor.
Thank you, Andrew. Michelle, we had mentioned that investing in digital labor allows for employees to focus on more strategic tasks. I know this is an area that you emphasize with your clients. Can you speak about this process a little further?
Sure. So I think the reason why digital labor or, this whole topic of robotic process automation is getting people really excited is because this idea or notion that time will be freed up for employees or personnel to do more value-added work. Now, with all that said, I think we also recognize that there's been some, concerns by individuals around whether these bots could take over, people's jobs, et cetera. So I think, as part of the conversations we're having with clients, we are very clear on, the fact that especially for tax department, this isn't a mechanism really to reduce heads, but more often it's really to create that capacity and to truly free up people's time because as we all know, in tax, whether, it's dealing with transfer pricing or indirect area, the rules are, too often changing. So we're living in an environment with more demands from different regulators around the world. And with those increased demands, there's not a proportionate amount of increased headcount. So as we often say, it's trying to do more with less. And also, and then at the same time, dealing with data that's coming to tax departments that's, not in the form that we need. So really, when we think about this and why I think people are getting excited, it is about, freeing up that time. And with that, though, I think the way we approach and the way we're working with companies and approaching digital labor and RPA is a little different. So it's just not their traditional technology that we've seen where, you could have done participate in the upgrades of ERPs or implemented some type of a tax-related software. So, and I think there's been successes and kind of footfalls, but it is really approaching this in a way where not only time could be freed up, but also then what do you do with that time? So I think in the short term, that may not be much of an issue, but really kind of putting and thinking through more strategically on developing individuals as time does get freed up and advancing those individuals as they're doing more value-added work. So it is truly a cultural change, which I think is really exciting and getting our clients excited. But you do need some type of a plan. So it is not on an ad hoc, one-off basis, but to really maximize this form of labor and taking advantage of it. It's a matter of how do you embed it over a period of time, continuously improving some of the different process areas and making some of those enhancements, and therefore really creating that value in a tax department. So I think in some, it is a different kind of cultural change, and it requires a different form of change management with some plan and a roadmap that you could execute and evolve with this form of technology.
Michelle, I think you make some really interesting points there, particularly around, kind of the freeing up of capacity within tax organizations. And I'll tell you from my perspective, it's a refreshing view because too many times, clients enter into this with really unrealistic expectations. It's this sense of I'm just going to turn on these bots and they're going to do the work of my people and I'm going to reduce headcount. Where in tax, it's much more mature view from my perspective, that it's all about taking very expensive tax professionals and allowing them to do their work by taking away the kind of commodity-based stuff. And as you point out, it can be a huge cultural shift. You got to start to think about, if I had a digital assistant or digital laborer at my side, what would I do? When thinking about what the nature of work is going to be in the future. I've got a digital assistant that's going to do exactly what I say. They're going to do it 24 hours a day, 7 days a week without calling in sick, right? Doesn't make any mistakes. And so how would you imagine putting it to work? And I would say that to your point about this kind of commitment from a client perspective is you have to think about it really broadly and what's the impact on people going to be. Because at the end of the day, again, we're reading a lot in the newspapers and so forth, and there's a certain amount of fear, uncertainty, and doubt that goes around this. So I think my suggestion, particularly when it relates to cultural change, is begin that change management process immediately. I mean, today, whether you're doing anything with robots or not, so that you can, kind of start the seeds of that plan immediately.
Great. I want to thank Michelle, Mike, and Andrew for a very interesting conversation on digital labor, and to thank all of our listeners as well. As mentioned, this episode is part of a series on tax analytics topics and solutions, so be sure to listen to the other episodes in the series. You can find the other episodes on our website, pwc.com/TP Talks, or by search for the TP Talks podcast in the podcast section in iTunes. If you'd like further information about these topics, please email the participants, whose email address can be found in the description of the episode.